All right, let's get this show on the road. Today, we are going deep, deep into the stock market.
Deep dive time.
Specifically, those hot stocks that just went gangbusters in 2024. You know, the ones that doubled in price. Imagine if we'd all hopped on those rockets before they blasted off.
It's pretty wild to look back and see how much some of these companies surged ahead.
It really is. And, our source for today's deep dive is a Motley Fool article with a very catchy title. These 3 stocks doubled in 2024. Here's the best one for 2025.
Ah, the Motley Fool.
Always a good read.
Oh, yeah, they always have some interesting insights. So this is kind of like our crystal ball, but instead of fuzzy predictions, we're going to unpack what actually happened and try to figure out why. No fortune telling, just solid analysis.
Sounds like a plan. So which companies are we putting under the microscope today?
Well, get ready for a delicious deep dive because first up is Toast.
Toast. Like the breakfast food.
Not quite, though. You might be hungry for their stock performance. We're talking about Toast, the company, the restaurant tech platform. Oh, right. I've heard of them. Aren't they like the Square for restaurants?
That's a good way to put it. They do point-of-sale systems, online ordering, all that jazz. Basically helping restaurants run their businesses smoother.
Cool. So what about the other 2 stocks? What's on the menu?
Next up, we've got Revolve, a fashion company that's absolutely crushing it online. Think trendy clothes, influencer marketing, the whole shebang.
Oh, yeah, Revolve. I know a few people who are obsessed with their website.
Yeah, they've really carved out a niche for themselves. And last but not least, we're going to lace up our sneakers and check out On Holding.
On Holding, the shoe company.
The one and only. They've been on a tear lately. Their stock's been sprinting ahead.
Interesting. I actually own a pair of their shoes. Pretty comfy, gotta say.
Right. They've definitely made a name for themselves. Now, here's the kicker. All 3 of these companies saw their stock prices double in 2024. Pretty amazing on its own, right?
Yeah, that's a heck of a return.
But we don't want to just stop at the wow factor. We're going to go deeper, dig into what drove that success, and even get our experts' take on which one is poised for even more growth in 2025 and beyond. The why behind the wow.
I like it. Get into the nitty-gritty. But before we dive into the individual companies, maybe we should set the stage a bit. Talk about the overall market context.
Good point. It's like before we analyze the specific ingredients, we got to taste the whole dish.
Exactly. So I think it's worth mentioning that while these 3 stocks were going bonkers, the S&P 500 as a whole also had a pretty decent year.
Yeah. So it's not like they were just riding a rising tide. They were actually outperforming even in a generally positive market.
Right. It's like they were speedboats zipping past sailboats, even with a favorable wind.
That's a great analogy. So what do you think was driving that extra oomph?
Well, the article points to a pretty significant shift in what investors were looking for in 2024.
Ooh, a shift, huh? Like a change in the tides? Tell me more.
Absolutely. You see, for a while there, it was all about growth at all costs. Investors were pouring money into companies that were growing super fast, even if they weren't actually profitable.
Yeah, it's like everyone was betting on the next Amazon or Tesla, hoping to get in on the ground floor of the next big thing.
But then 2024 rolled around and things started to change. Investors got a little more cautious, a little more discerning. They started demanding to see some actual profit.
Like, show me the money instead of just show me the potential.
Exactly. And this shift was partly driven by rising interest rates. Borrowing money got more expensive, so companies that had a solid financial footing, strong balance sheets, positive cash flow, they become the new darlings of Wall Street.
So it's like everyone suddenly decided they wanted to see the actual bakery, not just drool over pictures of delicious cakes, right? They wanted to know if the business could bake those cakes and sell them at a profit.
I like that, a very tasty analogy. And this is where Toast's story gets really interesting because they're a perfect example of this shift in investor sentiment.
Oh, really? Tell me more. I'm all ears.
So you see, in 2022 and 2023, Toast was struggling to turn a profit. They were posting some pretty hefty losses.
Okay, so not exactly a recipe for success at that point, huh?
Not quite. But then something interesting happened in 2024. Things started to shift dramatically for them. They significantly reduced their losses while still investing heavily in growth. It's a classic turnaround story.
Wow, that's quite a turnaround. Sounds like they found some secret ingredient.
Maybe not so secret. It was more about making some smart strategic moves. They managed to boost their revenue really rapidly while being super careful about managing their expenses. It's like stepping on the gas pedal while keeping a close eye on the fuel gauge.
So it's not just about growing fast, it's about growing smart.
Exactly. And one of the key things they did was keep investing in sales and marketing to keep that growth engine humming. But at the same time, they trimmed down a lot of their corporate overhead.
Ah, so they were expanding their business but not wasting money on fancy office furniture or executive retreats. More like lean and mean growth.
Yeah, you could say that. They were laser focused on efficiency.
Okay, I love the big picture, but I'm a numbers guy. Can we break this down with some actual figures so it really hits home? Show me the receipts.
Of course, numbers are always important. So let's look at some of the key stats. Their revenue shot up by a whopping 26% in just the third quarter of 2024. That's impressive growth, right?
Yeah, 26%. They must have been popping champagne corks over at Toast HQ.
And they did this while increasing their sales and marketing spend by 14%.
So they were putting more fuel on the fire, but in a controlled way.
Exactly. And get this, they actually slashed their general and administrative expenses by 17%.
Whoa, that's a big cut. So they were growing revenue, increasing marketing, but cutting unnecessary costs. That's a pretty powerful combo.
It is. And what did all this mean for their bottom line? Well, they went from a net loss of $231 million in the first 3 quarters of 2023 to just a $13 million loss in the same period of 2024.
Wow, that's a massive swing in the right direction. No wonder investors were impressed and their stock price took off like a rocket. They went from bleeding money to almost breaking even, all while growing like crazy.
Exactly. Investors saw that Toast was serious about reaching profitability, and that's like catnip to Wall Street, especially in a market that's gotten more cautious.
It's like they were this scrappy underdog that suddenly transformed into a lean, mean, profit-making machine. And investors love a good comeback story.
They do. And Toast's story is one for the books.
Absolutely. Now, let's switch gears a bit and move on to our next company, Revolve. Their story starts with a bit of a sale feel, wouldn't you say?
It does. At the beginning of 2024, Revolve was trading at its lowest valuation ever, like rock bottom prices.
Really? How low are we talking?
We're talking about one-time sales. Basically, that means the company's total value was roughly equal to the amount of money it brought in through sales in a year.
So for investors, it's like walking into your favorite store and finding everything marked down to the bare minimum.
You got it. Imagine designer clothes, shoes, accessories, all practically being given away. You'd think investors would be swarming the place, right?
I mean, who doesn't love a good bargain? But even with that bargain bin pricing, why weren't investors jumping at the chance to buy Revolve stock? What was holding them back?
That's the interesting part. Revolve actually had really strong financials, like consistently making a profit year after year.
So it's not like they were losing money. They were already in the black, bringing home the bacon.
Exactly. And not only that, they had zero debt. Zilch, nada.
So no looming bills hanging over their heads. That's a pretty good sign, right?
Very good sign. And on top of that, they had over $250 million in cash just sitting in their bank account.
Wow. They were like a financially responsible fashionista. So with all that going for them, what was the issue? Why were investors lining up to buy their stock?
Well, there were some concerns about their growth slowing down. You see, while their financials were solid, their growth rate had kind of stalled.
So it's like having a perfectly good car, but worrying that it's only going to go 5 miles an hour. Reliable, sure, but not very exciting.
Right. Investors were hesitant to jump in, even though the company was financially healthy, because they weren't sure if Revolve could keep growing at a pace that would justify a higher stock price.
So it's a bit of a head-scratcher. They had the money, they had the profits, but they lacked that speed factor that gets investors really excited. So what happened? How did Revolve get back in the fast lane?
Well, in the third quarter of 2024, they managed to put their foot on the gas pedal, metaphorically speaking. Their revenue jumped by 10%, which put them back into that double-digit growth zone.
Okay, so not a massive surge, but definitely a move in the right direction. Enough to turn heads.
Enough to make investors take notice, that's for sure. And what was even more important was that the management team sounded very positive about the fourth quarter.
So they were basically saying, hey, this isn't a one-time thing. We're back in the growth game, baby.
Exactly. They were projecting confidence, and that can go a long way in calming investor nerves.
So they managed to convince investors that their engines still had some horsepower left. That 10% jump, while not as dramatic as Toast's turnaround, was enough to signal that they weren't stuck in neutral.
Right. And they did this while still catering to their core customer base of 2.6 million, which is pretty impressive considering their focus on specific demographics and higher priced items.
Okay, so they weren't trying to be everything to everyone. They were sticking to their lane and doing it well.
Exactly. And that's a key part of their story.
All right, let's lace up our sneakers and sprint over to our third company, On Holding. Their story seems to be all about grabbing opportunities when others hesitated, wouldn't you say?
You could say they were ready to hit the ground running when the pandemic changed the game for retailers. You remember how a lot of the bigger shoe brands shifted their focus to online sales during that time?
Oh yeah, everyone was stuck at home, so online shopping was the only game in town. Brick-and-mortar stores took a big hit.
And that's where On Holding saw their opportunity. You see, all those bigger brands pulling back from physical stores left a gap on the shelves.
Like a vacuum waiting to be filled.
Exactly, and On Holding didn't hesitate. They swooped in and snagged that shelf space, putting their shoes right in front of shoppers who were eager to get back out and buy things in person. It was a bold move that paid off big time.
So it's like they saw a wide open lane and just sprinted for the finish line. And the numbers definitely back that up.
Oh, those numbers are impressive. They saw their net sales increase by a whopping 69% in 2022 and another 47% in 2023. That's some serious momentum.
It's like they were running laps around their competition. And even in the first 3 quarters of 2024, their sales were still up 27% compared to the previous year. Talk about a victory lap.
They were on a roll, no doubt about it.
It's incredible to see a company capitalize on a changing market like that. But the big question is, did they sacrifice profits for speed? Was it all about growth at any cost? That's always the worry with such rapid expansion.
Actually, not at all. On Holding managed this crazy growth while keeping their finances in tip-top shape.
Oh, really? So they weren't just burning through cash to get bigger.
Nope. Their gross margin was over 60%.
Hold on, remind me again. Gross margin,
It's basically the profit they make on each shoe after you take out the cost of actually making them.
Right. So over 60%, that's pretty healthy, isn't it?
Very healthy, especially for a company growing as fast as they were.
Mm-hmm.
And their operating margin, that was over 9%.
Okay, now that one I always get mixed up. What's operating margin again?
Operating margin is the profit they make after paying for all the costs of running the business, not just making the shoes.
Right.
Things like marketing, salaries, rent, all that.
Ah, got it. So it's a broader measure of how profitable they are overall. And 9%, that's...
Seriously good, especially for a company growing that fast. Most companies, when they're expanding that quickly, their margins get squeezed because they're spending so much to fuel that growth.
It's like they're this marathon runner who's also a financial whiz, budgeting for energy gels and victory celebrations all at once.
That's a great way to put it.
It's also worth noting that On Holding isn't putting all their eggs in the retail basket, right?
You're absolutely right. They have a very strong direct-to-consumer game going on.
Oh, right. Selling directly through their website. Smart move.
About a third of their sales come directly through their own channels, cutting out the middleman.
It's like having a backup generator in case the power goes out at the store.
Yeah, it gives them more control and flexibility.
So we've got 3 really different companies here with 3 very different paths to success. It's fascinating to see how they each navigated the market in 2024.
It really is. Each of them has their own strengths and their own challenges.
But I gotta know, of these 3, which one are you most bullish on? Which one are you betting on for continued success?
Ooh, that's the million-dollar question, isn't it? It's a tough choice because they all have compelling stories and they've all proven that they can adapt to a changing market.
So who's your pick? Drum roll, please.
If I were putting my money down, I'd go with Toast.
Really? Interesting. I was kind of leaning towards On Holding with that insane growth they've had.
I get it. Their growth has been spectacular. And Revolve's comeback story is impressive too. But I have a few reservations about their long-term potential.
Okay, lay it on me. What are you seeing that's making you hesitate on those 2?
Well, starting with Revolve, I think they're playing in a somewhat limited market. They're focused on those higher-priced items. It kind of puts a ceiling on how many customers they can realistically reach.
So it's like they're selling handcrafted artisanal shoes or something. Amazing quality, but not everyone can afford them.
Right. They might hit a ceiling, even with a great marketing team.
And their 10% growth, while good, isn't exactly setting the world on fire.
Exactly. Now, On Holding, I'm a bit wary of their valuation. They're currently trading at something like 15 times sales.
15 times sales. It means investors are betting a lot on their future growth continuing at the same crazy pace.
Like assuming a sprinter can keep up a world record pace for an entire marathon, That's asking a lot. And the athletic shoe market, it can be fickle, you know? What's hot today might be collecting dust on the shelves tomorrow. It's hard to know if On Holding can maintain this momentum.
So more risk baked into that high price.
Right. Less margin for error. So those are my concerns with Revolve and On Holding.
Okay, I'm starting to see why Toast is winning this race for you.
We've just got a few things going for them that make me really optimistic.
Break it down for me. What makes Toast stand out?
First off, they're laser focused on the restaurant industry, which is huge, and people aren't going to stop eating out anytime soon, right?
It's like saying people will always need food, so invest in farms and grocery stores. It's a basic human need, but in this case, it's about how that need is met and managed.
Exactly. Restaurants are always going to need better ways to manage their operations, to reach customers, to process payments, and that demand for tech solutions, it's only going to grow.
Okay, so big market check. What else?
The article also talked about something called market saturation that's actually working in Toast's favor.
Wait, market saturation, isn't that usually a bad thing?
It can be, but in this case, it's actually helping them. As they get more restaurants using their platform in a particular area, it actually becomes easier to win new business.
Hold on, how does that work? The more restaurants they have, the less there are to sign up, right?
Think of it like this. Imagine a bunch of restaurants in a city all using different systems for taking orders, managing tables, processing payments. It's a mess.
Yeah, total chaos.
But as more and more restaurants switch over to Toast, it creates a network effect. Restaurants see their competitors using it, and they want to be part of that smoother, more efficient system.
So it's like the cool kids table in the cafeteria. Everyone wants to sit there once it reaches a certain critical mass.
Exactly. And for Toast, that cool factor comes from efficiency and potentially lower costs.
Okay, so huge potential market, a product that gets more valuable as more people use it. What else is in Toast's favor?
Well, don't forget, they're on a clear path to profitability. They've shown they can grow rapidly while also reining in their spending.
And still investing in growth. It's like they've found that sweet spot between being smart with their money and aggressively expanding.
I think they're in a great position to sustain strong revenue growth in 2025 and beyond.
So the stock price has the potential to climb even higher, you're saying?
I think so. As that profitability keeps improving, investors are going to take notice.
It's like watching a skilled climber ascend a mountain. Steady progress, solid footing, and the summit's still ahead. Of course, there are always risks with any stock, but Toast seems to be managing them well.
They've shown they can adapt and make those tough decisions. That's key in the world of finance.
Well, this deep dive has been eye-opening. It's fascinating to see how these different companies approach the market in 2024 and how each strategy led to success in its own way.
Absolutely. And it reinforces the idea that there's no one-size-fits-all approach to investing.
It's not just about chasing the hottest trends or trying to time the market perfectly.
Right. It's about understanding those underlying stories. What's the company's strategy? What are their competitive advantages? How are they adapting to changes in the market?
Those are the questions that we should be asking when trying to figure out if a company has the potential to be a long-term winner.
Exactly. And I think this deep dive has highlighted how important it is to look beyond just the numbers.
We've seen how these companies thrived in a market that was changing, and that's valuable for any investor to understand.
Definitely. It's all about recognizing those trends and adapting your investment strategy accordingly.
Now, I want to leave our listeners with a thought-provoking question to ponder. As we look ahead to 2025 and beyond, what industries or trends do you think are poised for big wins? What's next on the horizon?
That's a great question to think about. It really is a bit like being a detective, isn't it?
Trying to piece together those clues and figure out where the market is headed next.
Right. Which emerging trends are going to shape the future? Which companies are going to capitalize on those trends? It's all about connecting those dots.
Absolutely. Now, I know you're probably not going to give away all your secrets, but are there any particular sectors or industries that you have your eye on right now and that you find particularly intriguing as an investor?
Well, there are definitely a few that I'm keeping a close watch on, doing my research, seeing how things develop. But, part of the fun is discovering those opportunities yourself.
Fair enough. I wouldn't want to spoil all the surprises.
Yeah.
But you've definitely given our listeners a great framework for approaching these questions, and that's incredibly valuable.
And remember, the market is always changing, always evolving. What worked yesterday might not work tomorrow, so you got to stay flexible, keep learning, adapt as you go.
That's like a game of chess, always thinking a few moves ahead.
Exactly. And that's what makes investing so challenging and so rewarding.
Well said. This has been a fantastic deep dive into some of the most exciting stocks of 2024. Thank you so much for sharing your expertise and insights with us today. I always learn so much from our conversations.
My pleasure. It's always a treat to talk about the market, and hopefully we've inspired our listeners to get out there and start exploring the world of investing for themselves.
I think we've done just that. So, to our listeners, remember what we've talked about today. Pay attention to those market trends. Don't just focus on the numbers, do your research, and never stop learning.
The market is full of opportunities just waiting to be discovered.
Who knows? Maybe you'll be the one to uncover the next big winner. Thanks for tuning in, everyone, and we'll catch you on our next deep dive.